So Andy, welcome to the Mortgage in Principle channel. Obviously, we haven't met each other in person, I don't believe, but we've had plenty of phone calls.
Yes.
So we're just going to be talking about just the USPs, I suppose, of Newcastle, a bit about yourself as well. So what we'd like to know is, how long you've been in the industry,
Yeah.
and also, I guess, Newcastle's history.
Good. Good. With regards to the industry, over 10 years now.
Mm-hmm.
I've been with Newcastle for intermediaries for just over 4 years, which is incredible.
Yeah.
Scary how fast the time's gone by, and so much has changed within that window. And there's been all these different external challenges and everything else.
Mm-hmm.
So, yeah.
And where were you before Newcastle?
Before Newcastle, I was with Bank of Ireland.
Right.
So
Okay.
I started there working through in the direct channel.
Yeah.
Which I really enjoyed, the different sort of conversations there, speaking with the customers directly.
Mm-hmm.
So that was my introduction into mortgages.
Yeah.
So yeah,
Oh, tidy.
yeah, I really enjoyed that. And after being in that role for a few years, I moved on to a TBDM role, which I almost fell into.
Yeah.
And that was my introduction to this intermediary world, which is something I really enjoy.
Yeah.
So I stepped across to Newcastle, like I say, just over 4 years ago, and
Brilliant.
yeah,
Yeah.
never a
And
dull
you
moment.
never look back. Yeah.
Never a dull moment in mortgages.
Yeah. And obviously you're from Bristol.
Yes.
Yeah. You're Bristol Rovers or City?
It's a tough one. My brother used to play for Bristol Rovers, look, so there's a soft spot there for the gas, I'd say.
Yeah. A bit of rivalry as well. Swansea and Bristol as well.
Yes. Do you know what? I was at Ashton Gate actually. It was against Swansea. It must have been 5-6 years ago. Because I say the family are Rovers fans. We had season tickets at Bristol City because the level of football was a bit higher, and they had some really good discounts on. So yeah, we snapped the hands off of that. So it was Bristol City versus Swansea at Ashton Gate. Whatever had happened, the Swansea fans had arrived about 15 minutes after kickoff.
Yeah.
So they were escorted by the police from Temple Meads, and whatever happened, there was a bit of a delay. They walk into the stadium 10-15 minutes late. Nobody's watching the football at this point. the fans are pouring in. The atmosphere was just incredible. So yeah, that was a bit of fun.
Obviously, I'm a big Swans fan myself, but I've always found Bristol a bit of a fun derby because, Bristol's probably my favourite night out. It's a lovely big little city. Bigger than us, but in terms of the UK, but no, a great a great match when we do play you.
Absolutely, always.
So, what are the USPs, I would say, of Newcastle Building Society? What are your main target audience or customers? Is it residential? Is it buy to let?
There are so many. There are a lot for us to get through. But I would residential over buy to let, absolutely. A change that we brought in quite recently was actually no maximum age to residential repayment mortgages.
Wow. Yeah.
So when I joined Newcastle over 4 years ago, we'd have probably capped the term to state retirement age.
So there's no maximum age at all.
The one rule around that, the maximum age at application is 78. But essentially a 78-year-old could even have a 40-year term. So we're not going to lend beyond age 118, which, 4 years ago, we'd have capped it to state retirement age. We pushed it up to age 80. We can still get there comfortably. But now I'm telling you, we can lend beyond age 80 for a residential repayment mortgage.
Wow. I mean, it must be something in the Northeast, because last week Darlington told us 99.
Yes.
I know you're telling us no limit as well. Wow. That's good. It is really good. I mean, in the past as well, and the same question I asked Darlington was, you had to take out, not had to, but they would prefer you take out life insurance if you're going to have a mortgage that long. Most people at that age have got it anyway, or it's later life lending. But is it mandatory that they have to take out life insurance?
There's nothing in the policy around that. I think the truth is, you as the advisor, you'd be the expert, and the onus is on you and everything else. But yeah, we're getting an awful lot of later life inquiries at the moment, and we're seeing that there are, not a trend, but a type of inquiry that we're seeing. So it works really well with joint borrower, sole proprietor.
Yeah.
It works really well for applicants who've got age gaps.
Yeah.
So again, really, really well there. Or it could be a mother and daughter living in a property. The mother wants to stay on the mortgage. It's those type of scenarios we're finding work quite well.
Yeah, I think I had noticed, and this is what customers, it would be helpful for them to know as well, is that criteria changes so often.
Yes.
So if you'd asked me 3, maybe 5 years ago how to get a mortgage with your mum on, and say for example she's 57, 60,
Good.
a lot of them were going 15-year maximum, 20-year
Yes.
maximum, and there was one or two lenders that might have done that, but it was, you're ringing around your Newcastles at the time.
Yeah.
No, can't do that.
Of
No,
course.
can't do that. Darlington at the time, maybe, I can't guarantee Darlington didn't, but there was one or two lenders that did it, and pretty much the majority of the market didn't. So
Yeah.
that's a really good one, yeah.
It is. And the joint borrower sole proprietor one, the good example there, what we find quite often is maybe, someone's separating from a partner. So they're looking to pay off an ex-partner, bringing a parent on to help with the affordability. Great. A lot of lenders, and us included, we used to cap the term to age 80. And, if the parent was 55, 60 or older, the challenge, one of the challenges of joint borrower sole proprietor is that monthly mortgage payment. And us now being able to extend the term beyond age 80, it might mean that the main applicant can take a bit of accountability. Now they can manage the mortgage payment over a long term.
Yeah, that is really good. And what else have you got for us?
Do you know what? I get a lot of phone calls for interest only. I think a lot of interest only inquiries, and the reasons for that is we're generous on the affordability, which we stress on interest only. I talk about no max age for residential repayment mortgages. Interest only, we cap to age 80.
Any loan to value bracket?
What would you say is typically the repayment vehicle, probably?
Well, I think the most common sale of mortgage property, in it. Yeah.
Good. With that, it'd be 60% on interest only, up to 85% part and part.
Standard, I guess.
Yeah. But I think it's the age 80, the generous affordability, and here we'd be looking at sort of around 150 equity if we're downsizing. So we do get a lot of interest only inquiries.
Okay. Yeah, and I believe you do. Is it you started the 98% loan to value one as well, haven't you?
Yeah, absolutely. So for first time buyers, we will lend up to 98% LTV, meaning they need at least 2% or 5k deposit, whichever is higher. So it's just, I suppose, us trying to be a bit more creative to support first time buyers. And there's a lot of options out there at the moment around smaller deposits, around affordability, and things like us with the term, because the average age of a first time buyer is increasing. So there's sort of different elements we can combine. But yeah, we will now lend up to 98% LTV for first time buyers, and only one of the two applicants actually would need to be a first time buyer.
Wow. And what's the credit scoring like with that? Is the credit scoring like quite tough?
You'd expect it's going to be a little bit tighter than maybe a 90 or 95% loan to value mortgage because of the additional risk.
So you'd expect maybe like default the last 3 years or even 3 years prior, you're still probably looking at the absolute pinnacle, the kind of creme de la creme type of client, really.
It's difficult. The only difference between 95% and lending at 98% is if the dip declines because of credit score, we're not able to log an appeal at these sort of higher LTV areas. So if a dip were to decline because of score or whatever else, that would be that. Whereas at a lower LTV, we could challenge that, where someone's had missed payments due to a life event, which we'd apply discretion to, something like that. So yeah, I suppose it is tighter, but we're getting a good amount of inquiries through that. And there are, like I say, a lot of other options as well, with more lenders coming into this space. So yeah, we're having success with that.
Yeah, good. And you obviously do 1 year self-employed, is it?
Yeah, absolutely right. Yeah. So if someone's been trading as self-employed for less than 2 years, they've just got the first year's finalised, we will accept that. The caveat with that is they need a larger deposit, so up to 80% loan to value for those type of cases. But I would say self-employed is an area where we are looking to support. Once we've got 2 years trading for a self-employed applicant, we're lending up to 95% LTV on the standard range of products. But I think where we can be quite supportive is if we've got a limited company director, we can use their salary and dividends. And if we're using their salary and dividends, we would use the latest year.
Yeah.
So that's option one. Option two, maybe they're not drawing much by way of dividends. We can look at the accounts and we can look to use their share of profits. And
so you can be a little bit more pragmatic then, is what you're saying? Yeah,
absolutely. The ball's in your court. We've got different ways we can look to stretch the income. I suppose it's just worth a conversation. We get the type of cases where maybe I had one this week. The applicant was a dentist. They had a really good level of income.
Mm-hmm.
The middle year had dipped where they'd invested in another dental practice.
Mm-hmm.
The latest year was back up. What we've done in that example was we've ignored the middle year
Mm-hmm.
because there was a justification behind it.
Mm-hmm.
So those sort of cases are treated on their own sort of merits. We're looking at the overall case. But I think the message that I'm trying to get across is it's worth a conversation with you and through myself. And where we're trying to build a little bit more confidence and trust with
Mm-hmm.
those type of cases, we can speak to one of our like top lead underwriters,
Mm-hmm.
and what we're giving you is front end underwriting, peace of mind and clarity. We don't want to lead you on with those type of cases. So yeah, we find a lot of those sort of exceptions or outside of traditional policy. There might be an element of self-employed or a day rate contract or with gaps, that type of thing.
And how do you work out your day rate contract income? Because like various lenders, it's 46 weeks, 48 weeks.
Yeah.
It's day rate times by 5, times by 46.
Yes.
You know, what is yours?
Times 5, times 46 with us.
There we are, brilliant.
Yeah, I think where we're strong with the contracts is time remaining on the contract.
Yeah.
So we'd like to see a track record in the industry, probably 2 years in the industry.
Mm-hmm.
We'd like 12 months history contracting. We'd like to see they've got at least a month remaining on the contract at application. So that's come down from what it was once before. So yeah, we again, it's worth a conversation, these type of cases.
Yeah, and you've obviously got your affordability boost.
Yes.
You've got there's 2 types, isn't there? There's enhanced
That's
plus
it.
and there's the affordability boost. Can
Yes.
you just break them down for me? Because I even still to this day,
Yeah,
I use them, but I forget which one's which.
yeah, that's fair. That's fair. There are specific products, and you're right. So yeah, we'll start with Enhanced Plus. Enhanced Plus is for loans over 450,000, and what you can get there is up to 6 times income.
Yeah.
We might look to use 100% of variable income instead of the standard 80%. We might look to use more sort of quirky types of income, so RSU, the restricted stock units, SIP income. The way I describe it, there's probably just added discretion. And again, with those type of cases, they would go across to a lead underwriter. So again, it's peace of mind, clarity, front end underwriting. So we're doing a lot more with the larger loans. Essentially, it was an evolution of what was our large loan proposition is now Enhanced Plus. We've increased the loan amounts at higher LTV limits, so now you can borrow up to $1 million at 90% LTV. So we've seen a lot of improvements with that. Like I said, there are specific products, but the calculator is built online, the dip's keyed online. It's all really quick and easy, and there's that peace of mind, like I say, by having that direct route to an underwriter. Affordability Boost is quite different.
Yeah.
Affordability Boost, they are products that are fixed for 6 years. So that's where I'll start. But with Affordability Boost, there's no minimum income requirement. So that's great. It's not just for first-time buyers. So a lot of lenders have these propositions with the additional borrowing facility, which tend to be pointed towards first-time buyers. Whereas what's nice about Affordability Boost being available to self-employed, PAYE, first-time buyers, of course, but also home movers, remortgage, existing customers, whoever needs it. I had a case quite recently where we had a couple that have separated. They've gone their separate ways, sold their property, and now they're buying on their own. And the Affordability Boost was an option that worked well for them. Of course, they're not first-time buyers, but our boost was available to them. So yeah, no minimum income, available to everyone. And we've got a couple of case studies on the website. It can be quite significant, the additional borrowing that is available. I think we say it's up to 6 times income.
Yeah, and you can see that in the calculators. You know, you go through it, and some cases you're going, oh, hang on now, that's not much better.
Nope.
But in Newcastle's defence, there are cases where it just flies up.
Absolutely.
It's really good. And from an affordability perspective, it's good to see a few lenders that are really, taking note of what the FCA said recently.
Yeah.
So I think the last thing you mentioned to me earlier was you've got that foreign national policy that's changed slightly.
Yes. So where I think we have success are for applicants on the skilled worker, the healthcare tier 2 visas.
Yeah.
With these applicants, we can actually lend up to 95% loan to value.
Which is rare, yeah.
Absolutely. Yeah. And I think with us, we'd like 2 years in the UK. So that's come down from 3 years down to 2.
Yeah.
We just need to see 3 months remaining on the visa.
Right.
We probably expect to see that they maintain some credit in the UK for 12 months.
And we're talking doctors and stuff like that,
Absolutely.
is it?
Yeah.
Which makes sense.
Yeah. So we're getting a lot of those type of inquiries. And again, those are the sort of ones where it's worth a conversation, talking it through and seeing what options might be available at the higher LTV range.
No, very good, very good. Yeah, so I guess the last thing then that we're going to be talking about, the last couple of things really, which is what I'm wrapping up a lot of these videos towards the end recently, is AI. That's one thing. And the last thing will be mental health. But with regards to AI, then, what do you think? How do you think it's going to affect our industry over the next couple of years?
Wow, what a question. AI. You'd like to think that it's going to drive efficiencies,
Mm-hmm.
which is only good.
Mm-hmm.
So we're seeing a lot of it already anyway.
Mm-hmm.
And obviously with lenders, it might help with regards to service levels and getting offers quicker, which is great. So I think a lot of good will come from that. I think what we need to see more of, and eventually we will see, is the conveyancing. And I
Yeah.
think there's, we've been to events recently and the focus on the conveyancing, and they're talking about the legislation and the way the information and data is captured,
Mm-hmm.
and they talk about the amount of time that we can knock off of that type of process, because you've got, some of the big six lenders getting you offers on the same day. It's incredible.
Yeah.
So yeah, there's a
I
lot.
think that is the thing, isn't it? Sorry to put in there, but I think from a mortgage side, I've seen a huge improvement.
Yeah.
Offers are quicker, especially if you look back at COVID.
Yeah.
But, as I've mentioned on many videos, deed of postponement, things like that, deeds, things where, there's a couple breaking up, or probate maybe, it's just that bit takes a
Yes.
long time. And I
Yeah.
think that could be done. Even searches, searches do take, I think they are quicker now, but that doesn't need to be as long as it is. There's many things that don't need to be as long as they are.
No.
And I think I've read about like this digital passport for a house, which
Oh wow.
I don't know. Do you know anything about it yourself, Andy?
Not a lot. I think.
What have you heard?
Yeah, we hear a lot about AI at these events, and there's a lot of focus on it. I think from the lenders and the mortgage side of things, obviously we've got the open banking. A lot of lenders have access to the open banking and the automated valuations. But yeah, from the conveyancing side, you'd like to think improvements will be inevitable.
Possibly open property.
Yeah, there we go.
That would be a good one, wouldn't it? 100, because that's what I try and explain to a customer as well. I'm trying to say to them, because it's hard for them to understand that when solicitors do their work, they're also doing their work because somebody might have missed something from 30 years ago.
Yes.
30 years ago.
Yeah.
Like I've had it with mine. I think we had like an indemnity policy that had run out 25 years ago.
Okay.
But one solicitor picked it up 2 years ago. So that in itself should not be a thing.
No.
You should have AI progressively looking through that constantly before that house goes in the market.
Absolutely.
There could be that, couldn't there?
I had a really quirky one this morning, which was to do with the lease, and there was an overlap, and it's something I've never come across in my time in Newcastle or before. And yeah, it's keeping us on our toes, but you'd like to think that AI will drive efficiencies, and that process will come on and improve.
Hopefully.
Yeah.
Yeah. So the last topic is a bit of a sticky one for some people, but
Yes.
I like to talk about it, and it's good for us to reflect on it as an industry, is mental health.
Okay.
So us as brokers get very stressed, as you probably know. What are BDMs going through, and how can we work together better, I guess? Like, how can we as BDMs, brokers, how can we react better, not shout at each other?
Yeah.
What would you say is the key thing we need to do?
I feel like the respect is huge, and I'm fortunate because the brokers that fall under me in the Southwest are incredible. There's you develop really strong relationships, and you feel like there is that element of care there. And the truth is, you're acting in the client's interest. You want what's best for them, and so do I. I want to find a way to get that outcome, and we get a lot of ones where it's right up to the wire on completion, and a lot of lenders are going to ask for the 5 days with regards to receiving the car. I'm going into too much information, but no,
100%. Yeah,
it's sort of trying to find. We get calls, and it's people are waiting on the drive, they're ready to leave, and they need the keys. And what I like about being at Newcastle is you feel you can have a little bit more influence to help you get the results that you need for the client. So I enjoy my role because you like to think that you you do see a lot of really good outcomes, which is great in our relationship, and it's good for the client because they get the outcome that they need. We get a lot of support from the employer in Newcastle, I'd say. We've got a good group of BDMs in the Southwest who can lean on each other and support each other. And you know, that example I've given you at sort of the later stages at completion, it could be, let's go back to the initial start of an inquiry. You know, you might get a really complex inquiry, and you know, again, leaning on this group of BDMs in the Southwest, we might be able to share these sort of case details and things like that to hopefully find a home for that really complex inquiry. So it's nice to see that these lenders are working in, there's a collaboration there, so they're working together, and yeah, there's a lot of good in this industry. With regards to the mental health and everything else, our national account manager Michelle, she's been working a lot on vulnerabilities, which is incredible, the work that she's done there. And I think it's more about making sure that the clients feel that they've got the support they need, and the same for you. And yeah, it's sort of working with you and not sort of letting those vulnerabilities be to any detriment to submitting the case.
Yeah, no, absolutely. I think there's so much weight on our shoulders as brokers.
It's huge.
Yeah, you know, we feel so responsible for whatever outcome, whether, you know, even if rates go up and it's not our fault.
Yeah.
You know, it makes you have sleepless nights sometimes.
Of course.
And it's important to understand that you as BDMs, or business development managers, I should say in better terms, I've always seen it because I understand that you have the responsibility of taking on the broker stress.
Yes.
So like when you're going to sleep at night, you're thinking that advisor or that group of advisors is judging me now. You know, you can tell it feels that way. You know, I always try to be like, right, they're going through it just like we are.
Of course.
Like, you know, if rates go up, everybody is stressed.
Yes.
You know, it's not a nice thing, because if you've got any morals, you don't want rates to go up.
Of course.
And you don't want world situations to affect the wider market. But the reality is they do, and you can't predict it. No. So it's all about assessment of risk, take your mind out of it, and just treat everybody with respect. You know?
Lovely. So, and it's funny you say that, because that's obviously a challenge we're facing right now, isn't it? I had a phone call yesterday where we were trying to support with a product that was pulled, and the way they finished that call is they said, this is the 5th conversation I've had today with 5 different lenders with products that have been withdrawn. And again, they're just trying to get the best outcome for their client. So yeah, we're lucky really. We've got a good lot of brokers and advisors in the Southwest. So yeah, I suppose a challenge with the mental health, it comes down to like the work-life balance. I think that's something everyone is always trying to get right. And if anyone has mastered it, great.
I think you just got to set limits. This is what I said in the last video. You've just got to set limits. If you're going to do overtime, if you're down the beach and rates have gone up, unfortunately, if that's out of hours, you've got to set your limits. And you have to do what's best for clients. But I'm sure those clients would understand if they were, you know, in their job and they were with their daughter or their son or whatever. It could be something really important for family. You've got to set your limit.
Absolutely.
So yeah, that's everything, Andy. So lovely to meet you in person.
Thank you for your time.
Yeah, have you got much planned now? Are you off now?
I like the idea of the beach.
Yeah. You're off to see some other brokers then.
Absolutely.
So, we won't talk about that. But no, I wish you all the best, and you know, lovely to meet you in person. And thanks for coming on.
Thank you, Andrea.
Thank you.
Nice one.